Chinese yuan madness that's been spooking the markets. And like clockwork, these market averages tend to find their floors pretty quickly and then try going back higher, but they don't. The S&P can't seem to break above this fairly long-term pattern that started late last year. So, as I pointed out in the MDM report I sent earlier, before the market open, your risk reward in this kind of environment is not with market timing, as we can see. Now that said, if you're looking to scalp some points because you think that we're going to head higher, and that's what the MDM thinks, maybe into its upper band, you're welcome to try. However, the risk reward on stocks seems to present a far better opportunity this year. I mean, we've seen a number of stocks that we've talked about that have done very well and gone the distance. And some of these names have not gotten ahead of themselves, so you wouldn't have had to sell prematurely. You could have sat with the position for a number of weeks. The listeners will know, gone over a number of these stocks in prior webinars. Right now, I would like to talk about, however, some other names. Let me see here. I'm going to put on. Let's go with the first one is G Pro. I do have control. It's not letting me type in the G Pro name.
Okay, let me get that for you. There she goes. Whoops. Yeah, there we go.
Now, usually, when I type on the keyboard, the little box pops up, but it's for some reason not.
If that's the case, click on the chart again a couple of times, Dr. K, and see if it takes. Or hit also when you click on it and type in the symbol, hit the Enter key as well. So this is the new version of eSignal. Okay.
Okay. All right. Okay. So G Pro is something we put on the list on the 20th of July that had a pocket pivot, and let's see here. Yeah, that was the 17th. So this day here, 20th, went on the list, and then it went higher over the next 3 days, and it's been stagnating since. But the market has been weak, so relative to the market, it's not.
Dr. K, I got to put something in here. I'm not sure. Okay, there we go. For some reason, the volume wasn't showing. There you go. All yours.
Okay. All right. So as we saw on the 10th of August, we it had another pocket pivot. And relative to the market, it was doing pretty well. So for those of you who bought it on the 20th, you're sitting in profit. And if you added to your position on the if you bought it on the 20th, you're sitting in profit. If you added to your position on the August 10th, then you'll notice the next day it has a mini gap lower at the open, plus the volume was sufficient. So that would have been the day, before it ruptured. You can see it undercutting the sideways pattern, and so you should be out of the position because the volume was sufficient during the trading day to warrant taking profits had you bought it on the 20th, or cutting your losses had you bought it on the 10th. And as I said in the recent pocket pivot this one had on the 10th, it is a bottom fishing pocket pivot of sorts. Therefore, expect overhead resistance, and that does make these types of pocket pivots a little bit more risk laden because it's got to fight its way back up. Now, there's another one here I wanted to talk about. This is an interesting one, ADPT. Let's see if that comes up. There we go. Now this one was added to the list on the 16th of July, had a pocket pivot. Let's see here. The chart is still moving.
That's me. I'm adjusting it for you there, Dr. K. Make it a little bigger.
Okay. So on the 16th we added, it had a pocket pivot and went on the list. Then you can see here it undercut the pocket pivot, so there's nothing wrong with selling it. But then part of successful investing is being able to get back on board, because we put it on as a viable gap up on the 23rd here. So being able to lick your wounds and say, well, the market doesn't care that I lost money in this. It still looks good, and if you had bought it on the Bible gap up, and we put it on the list at 12:55 p.m. Eastern. So the company had gapped up and then retraced during the day prior to that, and then it stabilized and started to go higher. So that's when we put it on the list. So it went on the list probably around 98 and change, 98 and a half, something like that. And then you'd be sitting on some nice profits because it closed at 105, and then it's gone higher since then. But I like this one because it's a great example of losing. Sometimes you have to lose to win, as we found out, especially in this QE-driven, manipulated market environment. Here's another stock, GTN. And this one on the 13th was put on the list as a pocket pivot. And you can see here relative to the overall chart, this is one that you moved higher by, I don't know, what is that, 10% or something, 8%, and then it started to roll over again. So I wouldn't say this necessarily is getting ahead of itself here. But as it started lower to just reduce its, basically the technical started to roll over, and you really want to keep your stops tight. You can see here it undercuts the pocket pivot day very quickly. So you want to. This is a good lesson in a company where you've got to adhere to your stops and be very disciplined about it. To be able to eke out baby steps month after month in this kind of market environment it takes a very deft hand, and this year is arguably one of the most challenging just because it is more and more sideways, and stocks are a lot of them just don't pan out. And so if you minimize your losses but you're able to sit with the ones like SKX and a number of these that have done very well, then on balance you're going to be able to look back and say you're up 20, 30, 40 or even more percent so far this year. Here's another one, LGND. That's the one we put on quite a while ago. This was first added on May 19th, and so this one here, let me see. Yeah, here we go. May 19th was way back in here where it had a pocket pivot, and then as you can see on the weekly, it just continued to go higher in a rhythmical way. So there was no need to be selling this one out. It doesn't really get ahead of itself. But then as you can see up here, most recently, it had a high volume sell-off day, and again, that's your cue. You don't want to stick around in this one. Take your profits. You've sat in stock since May, and you're sitting on some decent profits, especially for this kind of market environment. And then the next day, the stock gets slammed even harder. Then we've got ACHC. This one we put on the list on May 27th, way back in here. And you can see after we added on the list, it just kind of went sideways. It didn't do much of anything. It didn't undercut the lows of the pocket pivot day, but it wasn't really doing much of anything. And then it finally gets going. And then it has an alert hit on the 5th of August here. I think because of good earnings, and we added that to the list on that day. We made note of it because if you bought it on the 27th of May and you're still sitting on it, you've got some profits. But then you see here it has a mini gap down. It's not really, yes, the market is weak, so I would take that opportunity to just sell the stock because the market, as you know, was tanking because of the situation in China devaluing their currency. And right now, who knows where it's going to go from this point on. Doesn't look like such a good bet right now. Then there's the biotech ABMD that we added to the list on the 4th of August. And let's see, that would be right here on the Bible gap up. And you can see that it just it shot higher since then. So be mindful. It looks like it is getting ahead of itself, and so keep your stops real tight on this one. It's not doing anything wrong yet, and the way I like to trade these is I like to sell in the weakness, but that's my style. Some people prefer strength. And there's nothing wrong with that in this kind of market, where when you've got your profits, it's usually good to take them. So keep an eye on this one. It is getting, it's going higher as we speak. And finally, Tree. That is one that we added on July 31st. It had a pocket pivot right on, where is it, that day there. It's July 31st, and then it had then it gapped higher. I think it was on an earnings report, and then it's just zoomed higher since then. And again, you want to keep a close eye on this because it does look like it's getting quite ahead of itself. I mean, you can see that on the weekly here, that it might need to consolidate or something. So be thankful that you bought it at what, $80, and now it's at 127. So you're sitting in a stock that's giving you more than 50% profit in 2 weeks. So be very thankful if you were one of the ones who did buy it on the report that came out on the 31st. Outside of that, we keep seeing commodities taking it on the chin. Oils hitting new multi-year lows. The Commodity Research Bureau index is the same thing. There's concerns that China is devaluing because, well, naturally they want to make their exports more attractive. And we all know that the whole world has been slowing economically, and of course China's been the big juggernaut that has been slowing. It's used to torrential rates of growth, but relative to what it used to grow at, it's been slowing down. So I think the government wants to stimulate the economy. And keep in mind, though, because of the strength of the economy overall, the Chinese yuan overall continues to appreciate against major world currencies, and I think it's up about 20% over the last 2 or 3 years. So for the Chinese government to take action and say we're going to devalue the yuan by 1, 2, 3%, I don't know if that's really a real panic measure. We all know that they want to do what's best for them in terms of their economy, but they're connected to everyone, so they've got to do they've got to tread carefully here, and not rock this boat, because this boat's got leaks in it, and the central banks are trying to patch up the leaks, and it's just sort of a stopgap measure until the leaks get worse and worse. So I think we're biding our time, and when people talk about, well, the great crash is we're going to have another 2008. Yeah, we could have a certain correction of much greater magnitude than we're used to over the last few years. So as always, just keep an eye on your stocks, the indices, and don't be shy about taking profits, and always adhere with discipline to your stops, because as we say, stocks take the stairs up but the trapdoor down, and these little blips in the S&P where it corrects 4% is enough to take out a lot of these stocks. That'll correct easily 16% over that 4% correction on the S&P, which can wipe out your profits, or can also take out what you made earlier this year, just because of the sudden correction that is put on in these stocks when we see minor corrections in the market averages. And keep in mind, we haven't seen a major correction in the S&P for a few years now, and that's quite unprecedented. Well, it's not unprecedented, but let's say it's a rare occurrence. So I think something is due, and the fact that the S&P keeps trading sideways is also the first time since QE started in 2000. Well, it started in late 2008, but it's the first time that the market can't seem to trend higher. So I think that's telegraphing, like I've said in a report, it's either telegraphing that something is seriously wrong and the central banks cannot help the markets. They've tried, and they've certainly propelled these markets higher since 2009, but maybe the printing of money is something that can't help the markets any further, which would of course be an omen for a much steeper bear market than we've seen in the last few years. And on the other hand, the bulls would say, well, the market's forward-looking, and if the Fed does hike, and futures say, I think 60% odds that the Fed will hike in December, then it's natural that the markets would be reluctant to move higher. They historically will correct 4 to 6 months ahead of the first rate hike. So again, it's all conjecture. keep an eye on your price volume on your stocks and your major averages, and then you can be able to navigate these very volatile waters, or shall we say dull waters, but can get volatile very quickly. And with that, I will turn it over to Gil.
I got a question from somebody for you, Dr. K. Do you advocate buying on a pocket pivot shortly before earnings, as in tree?
Well, as we discussed, I encourage everyone to go to the FAQs and type in the keywords buying stock before earnings. We have some discussion on that. It really comes down to your risk tolerance. When you buy a stock before earnings, assume the worst. Assume it's going to lose half its value, and therefore, if you bought X amount of shares, what would that do to your portfolio? Is that within your risk tolerance levels? So that you always have to be mindful of the downside first. So ask yourself that, and then position size accordingly. I certainly don't have a problem buying ahead of earnings, but the stock chart has to be right, and my position size is reflective of a stock that could gap down 50%.
Yeah, my general view is I don't buy into strength. So if you see a pocket pivot, I'll give you an example. Like you see G Pro pocket pivoting here, I'm not going to buy that up there. I think in this market only a fool buys strength. I would buy it along the 10-day when it's drying up, and as soon as it breaks the 10-day, I'm gone. That's what I would be using as my stop. I think you're in an erratic market here, where anything you're doing is really a short-term trade, and that includes the short side. Although the short side has been very profitable over the last 3 days, and I'll get to some of that. But I think for the most part, what you have is the Nasdaq breaks down, and the Chinese, by devaluing the yuan. And I believe it's pronounced yawn, at least that's what the Chinese people I know tell me. But in any case, but they don't want to call it that because it sounds too much like the yen, so you can get confused when you're trying to convey information about the yen or the yuan. So in any case, all you've got going on today is a rally up to the 50-day. I know that you have this reversal yesterday, and it was on higher volume on the Nasdaq. And of course, I think the crowd sees this as a bottom. It's a bottom, and I think to some extent the market direction model is like the crowd in that it's interpreting old ways of looking at the market and coming up with a signal here. So a lot of people, I think, see that, and the danger here, at least on the long side, is committing yourself to a bunch of stocks and then having the rug pulled out on you if this thing turns lower, because I don't think this is really out of the woods yet. All you're doing right now is rallying into the 50-day, and if you're watching individual stocks, I mean, they're all breaking down one after the other. So in my view, there's nothing underlying this market that indicates you want to be going long here. It's flashing at the very least cautionary signs, and who knows what's going to happen next. I think the Chinese devaluing the yuan essentially builds on their desperate measures to prop up their own stock market over the last 3 weeks, which they're going to do everything they can because they're a totalitarian government. The idea that they're free market capitalists, I know that some of the population is oriented that way, but let's get real, the system isn't. And I think ultimately the lack of transparency and the manipulation, all of that's going to catch up to them, and it might do so faster than it catches up to us. Because we're engaged in the same sort of activity, people whining about the Chinese devaluing the yuan, but at the same time the Fed is manipulating the dollar with quantitative easing. It's just one man's currency manipulation is another man's quantitative easing, so it all comes down to the same thing. And you have to wonder when you see desperate measures like that, and in fact it did rock the boat because the market sold off on Tuesday and yesterday, with a number of Chinese names taking it on the chin, and basically showing some of the desperation in trying to shore up their economy, which I think is slowing down very rapidly. So I mean, we'll see. But I think the bottom line again is always in what the stocks are doing, and we can look at something like Apple, which you can see on the weekly chart down here. Let's see how I make these come out a little more. It's broken down through the 40-week line, so it's sitting on top of this base here, back from I think late last year, early this year, but it's bouncing off that, which makes sense. So every time it comes down in here, you run into the near the 20-day here and this low here, so you get into this zone of resistance and you roll over again. Now you're rallying into the 10-day, so probably it becomes shortable up here. But my guess is you'll see this thing bounce back and forth for a while between this area of support, which isn't that big. It's only like, what, 9 weeks or so, somewhere around there. And it may bounce up a couple of times before it goes through it. But Apple looks toppy to me, so we'll see what happens. Whenever it breaks the 40-week line, it's tended to go lower. So, and that's usually when it holds its uptrend, it usually will find support along there, as you can see here. So I think that's troublesome. I'll give you some of the things I've been shorting. I thought this was a short up here on this rally, just above the 10-day as it's wedging up, and you get the gap down break yesterday, boom, and it comes off, 20 points and nothing flat, just about. Undercuts this low, so I think it's a cover at that point. Now it's kind of fluttering along here. If it rallied up to 170, I guess I'd look at it as a short again, but you get that kind of move in 2 days, you kind of have to take it and then see where things lie. But, yesterday you could start to see some of these things. Biogen's another one. That was a short here on this rally. I think we talked about it last week. And it's rolled over, and now you're building a little bear flag underneath the 10-day line. So, that was profitable last week. Baidu's pretty nice this week. Apple as well. Some others, on a tactical basis, in other words, short term, they're playable. You can see like Splunk, for example. This has failed from a breakout attempt. It's in this big, I don't know what you call this, a pod with pod ladle, or I don't know. It's just like a big pod with a long handle, so it's sort of like this giant pod ladle thing, whatever. But it's starting to fail. It failed on the breakout here. And now you're living under this confluence of moving averages. The 50-day is the primary one here. And you rally up into the line, it becomes shortable, boom, it comes down for $3 or $4, and you bank it, and then it bounces back to the upside, finding support along these lows as well as near the 40-week line on the weekly chart. So that's not looking too happy, and they come out with earnings at the end of the month, and so maybe that's going to bust on earnings. But Workday's another one. You can see here it rallies up. If you look back here, you had this gap down, so it rallies up to the lows of the gap down, the falling window here, and that's around the 200-day. So it finds resistance, and you can see it keeps running into resistance here. So, shorty here, it breaks down, bounces off the 50-day. You could cover it there. Now here we go again, and it's back to the upside. So that's like one of those trading channels or whatever it is, that old commercial from the late 90s where you just trade stocks going back and forth. A lot of these shorts are working like that, but they're in bearish positions. And with Workday also coming out with earnings at the end of the month, that might be when it finally resolves this pattern one way or the other. Let's see. Getting back to some of these Apple-related names, software, Skyworks Solutions rather, running into resistance here at these lows. It's in a bear flag. It's at the upper end of the range. Does it go lower? If the mark goes lower, it probably does. And so it may be setting up to be shorted, but the prime spot to hit it was here on this reversal and the breakdown, and now maybe you're going to stair step lower. If you look at the weekly chart, let's see here. You can see you're in a clear head and shoulders now, and this may either turn out to be a big head. You can see a fractal head and shoulders in here, right here, and then when it breaks the neckline here, it heads lower. So actually, if you draw a neckline along the lows here, it's kind of rallying up in there. But now you're starting to see a bigger left shoulder and a head here, and maybe it has to rally to form another, or actually to form a right shoulder. So this is looking pretty grim. NXPI is also breaking down a while ago. And I thought when, you can see the breakout here and it fails, and I thought when you started seeing this and it's all occurring together, they're all doing this together, NXPI, SWKS, what are the other ones, AVGO, they're all related, QRVO, probably not a good sign. And it hasn't turned out to be. So, you get these rallies here back to the 50-day after earnings. We're shortable. Now it's coming back down, testing the 200-day. Maybe it goes through, but you can start to see here a left shoulder, a head, and now it's forming a right shoulder. So your neckline is somewhere down here, around 84 or so. So it could be headed for the neckline from here if it breaks the 200-day. So you notice how the market's slopping around. My theory here is that what the crowd knows is that we bottomed and we're just going back to the top of the range, sure, because that's what we've done every time. But the one very distinct difference, and this is far more marked than I've seen before, is that there are no viable setups in my view. Yeah, there's these pocket pivots and these other stocks, a few of them, a small handful running up. As far as I'm concerned, you know, that they're just the next Intrexon, which looks great, and then kaboom, it comes down. And for the most part, I'm not seeing anything in a viable position. So previously, when we've seen the market come off prior corrections, you'll see a lot of stocks start to set up. So it gives you some clue that you're at least heading for some kind of a rally phase, and then you can play it accordingly based on the setups you see, and some of them work. You know, for example, I think on the last bounce we had a nice move in Netflix off the 20-day, and you know that was about 15, 16, 17% up to about 130. I think the high there was 129.29. So you know you'll get those playable type of setups, and I'm not seeing them here. And I think that may be a problem. And my theory is that if that's true, and let's say, you know, the essence of a bear market is that you're going into a phase of distribution. Institutions which had previously been accumulating stock are now in the process of distributing it. And you start to see the mass breakdowns. You see a lot of leading stocks, so the stocks like that are Apple related or cousins to Apple, whatever, SWKS, NXPI, you know, the whole semiconductor group actually for the most part has come apart. That is telling you something. And so this whole area is under distribution, and watch to see how other groups start to come under distribution. So I think that's really the issue here in terms of the lack of viable setup. So I mean, we could still just be in this choppy, bizarre market that goes nowhere. And you've seen today we've been up, we've been down, now we're running towards flat, Nasdaq slightly up. But basically a whole lot of movement and not a lot of resolution here, but you're basically bouncing right now, and we'll see how this plays out. You could rally for another day or two up to the 50-day and then see if you roll over. The S&P, I think, is just in this ugly, choppy range, and you're at the lows. So you held the 200-day yesterday. I was actually somewhat surprised by that, but it happened anyways. I think what it tells you is that the yuan devaluation might have induced some forced selling, and so that selling took place, and once it was done, you sort of had a vacuum, because you did see the volume start to dry up on an intraday basis, and then everything turned up, and we ended up, I think, roughly flat on the down, slightly up on the S&P and the Nasdaq yesterday. So you know, there's a big reversal, but that could just trick everyone into thinking that the market's bottoming, and then they just distribute stock to them again. So I think it's critical to watch and see how things play out here. Somebody says, I laughed yesterday when I saw/heard, don't fight the Chinese Fed. Yeah, on the downside, I guess. But they're trying to prop things up. Who knows what happens? Someone's asking about, whoops, I don't want to go there. Amazon. It's just hanging tight. It might be shortable here along the 10-day line. Watching on a 620 here, it might reverse it. It's taken a long time to get going from this gap, but I think it's a question here, as with any of these big stock NASDAQ names, as to whether it goes higher or lower. It'll depend on where the market goes, I think. And of course, these will be what leads the market up or down. So I think that for the most part, it's a question of what the market does. So can I tell you it's going up or down? No. There's no real evidence one way or the other, although you did see some support off the 20-day, but you do see volume. If you can see the volume here, it's picking up on the downside as it comes off. It's just tracking sideways. So, you know, flip a coin. I'm going to go to my list here. Let's see if we see anything happening. Alarm. But this is a watch list, a buy watch list from like a month ago. So here's Baba on a gap down, trying to rally up. You can see Ambarella is trying to hang along the 50-day, but it's kind of looking like it's in trouble here. So I'm a little bit wary of that. Avago, this is another one rallying to the top of this sort of flag formation resistance at the 20-day so far. So it might be shortable here with the idea that you'll get a break down to the 200-day before they announce earnings, which I think is coming up soon. They haven't already, have they? BioMarin, that thing is under its 50-day, and now it's wedging up into the 50-day. It looks like a failed breakout or failed base, and now that looks like a short right there. So what I'm trying to do is show you how things have broken down. Bluebird Bio broken down below its 50 a while ago, and now just continuing lower as it heads and bounces off the 40-week line on the weekly chart. CBG, this one's now below the 50-day. This is trying to break out in a base. Nothing happened. CDK was one that was acting better nicely earlier and then failed on this breakout attempt. Pretty ugly. CBM, Cambrex has been trying to break out, but notice how it's starting to waver. Cavium is a semiconductor that's trying to turn here, but it's not really clear to me. If you look at the weekly chart down here, is this a left shoulder, a head, and a right shoulder? You short it at 72, or you short it here and put a stop at 72. I don't know. That's what it's looking like. Celgene it failed on the Bible gap up here, but notice how it's drifting above on light volume today. Maybe it stalls out here and it heads lower. Maybe that's a short. I don't know, but it is a breakout. And if you bought the strength here, you've probably been shaken out of it already. Cyber, basically sitting here at the lows of a cup, maybe the left side of a cup, but it could also be a left shoulder, a pinhead, and a right shoulder, and this thing is headed lower. Okay, so you can see that some of these stocks that a few weeks ago were acting very nicely and looked like they were in viable positions, etc., have deteriorated. And some of them, a lot of them are starting to look like short sale setups. And so that's what I'm looking at. I look at the stocks. The indexes, a lot of times, are a lot of noise, but the stocks were telling you there was a problem a couple, 3 weeks ago. So to me, if you're looking on the basis of the stocks, I think the message was pretty clear. And I can tell when I'm making money on the short side. That's another confirmation that that's really where the juice is. Here's Ebex. This stock's moving higher. I tried to turn here, and now it's failing. Electronic Arts, basically in a base and trying to hold the 10-day. That's one of the few that's holding up here. Here's this EPAM. These are all old names. That's broken down, and it's living below the 50-day now. Expedia was trying to turn a while ago. It's still holding up, but I don't know. We'll see. Facebook, hanging on the 20-day. I went long some of it yesterday. I'm actually short a little bit here today. See if it breaks the 20-day again. Got a quick stop at the highs of the day, just testing it. I'm not really running any large positions right here, I would say. Pretty small stuff right now, as I'm testing this rally and this bounce, which is not really going anywhere right now. FireEye was it looked like it was going to head higher down here, and now it's all the way back down near the 40-week and starting to fall into this prior base. So that's not looking so good. Here's FIT. You know, people get all excited about this on the way up. Like I said last week or a couple of weeks ago, and it was breaking. It'll have a nice move, but you know, Cinderella doesn't come 3 or 4 times, maybe twice at the most, and finally it breaks down with the market. Fortinet hanging along the 20-day, but you had a pocket pivot here, I think it was. Yeah, is that a pocket pivot? Yeah, close, but not quite actually. And then here you're trying to break out your reverse, and that's not looking so great. GWPH. Just bouncing up in an ugly pattern, but it's broken down. GPN holding up there, but you gonna really buy it? GoDaddy. This one tried to turn here. So you know, here's a case of an IPO that has a great move, and you got to sell into it. And if you don't, then you're left holding the bag. If you think you're buying Oracle from 1999, I think somebody mentioned that with this stock to me. They emailed me and said. SEMA's Oracle from 1999. It's like, okay, not really, but in any case, GDaddy breaking down, GoPro breaking down, it's rallying up. Maybe that's a short there. Here's another one that was on the list. Well, that's starting to break down. Horizon Pharmaceutical, that's starting to break down. IMAX was one that was acting well before, and look how it's broken down. Infineon, hanging along the 10-day, but you know, you gonna buy that? Good luck. And Trexon broke down after looking beautiful. JetBlue hanging along the 10-day line, but a lot of these, well, this one actually trying to push to new highs, which is interesting. But again, would you trust that? I don't know why I had crispy. Oh, I know why, because of this gap up move. But look how that basically went nowhere. Here's a big sucker's pocket pivot here, and boom, you get hammered. Luxoft, yeah, you gonna buy that? Go for it. Good luck too. Let's see, MTSI, that's starting to look like a head and shoulders on the weekly chart. You see that? Even though it looks like it may try to turn and head for the 50-day, that's a possibility. Let's see, Dow's back up. We're just switching back and forth. It's like swimming with the algos. I remember when I was in Hawaii at, I think, the Waikoloa resort that we were near, they had like a big lake or something where you could swim with the dolphins. So on a day like today, you get to swim with the algos. Craziness. MasterCard going nowhere, but it's been trending higher, so that's one of the big stock leaders. Somebody says, you both often tell the story of late 1999 when O'Neill declared the market was done, then 4 days later you two were fully invested on margin. Did the setups emerge seemingly out of nowhere, or did they exist and we're simply waiting for the market follow through? I think if you go back, I mean, why don't you just go back and look at some charts from that period? You know, I don't know if I'm supposed to go through a litany of charts. All I know is what I was buying was set up in a buy position. It wasn't like it was in a downtrend and I suddenly bought it off the low. So Mobileye trying to hang in there holding the 10-week line, but it has had a big move. You know, you look at it on the weekly chart, that's a pretty decent move. So it may need some time to consolidate, and it's been getting hit with some selling, but it seems to be wanting to hold. So maybe that's one that will set up at some point. Netflix hanging up there, but the thing to keep in mind here is that it broke out down here and then it's gone somewhat parabolic, so the idea that it's necessarily going to go higher is probably the lesser probability, although it could. But if you really like it, I guess you could buy it here off the 10-day. O'Reilly Automotive, that one's acting okay. Looks like it's trying to go higher today. PANW, notice here maybe a left shoulder and a head on the weekly chart, but it's now violated the 50-day and it's living underneath the line. So that looks a little bit problematic. PayPal's one I've been watching, spin-off from eBay, not really an IPO, but it's just kind of building a base here. Probably needs some time at best. Retrofin living below the 50-day. Shop City trying to hang along the 50-day on the pullback. So notice this is kind of a jagged maneuver here. Maybe it's trying to turn higher. I think you have to buy when it looks the ugliest. Solar City was looking good briefly here, and it broke down. Solar Edge came out this last night with earnings, and it's reversed off the 50-day. So that's not looking so great here. Splunk, we were already looking at this. Starbucks, bouncing off the 50-day. Ulta, trying to hold along the 10-day. So there's a scant few stocks hanging along their moving averages. So I think if you feel really adventuresome and you really think this market's going to bottom, then you could try buying them. But I don't know. I like I said, I'm not doing anything really heavy right now because I don't really know exactly what I'm looking at right now. It just seems a little funky. Let's see. Here's Disney. This is one doing really great. I remember some guy on Fox Business News was babbling how you got to own Disney long term and you buy it and just hold it long term and you'll do great. Yeah, you're down about 15% off the peak now if you bought it there. Wayfair gapping higher. There's one example of a stock trying to get moving. I mean, there are handfuls of them, but it looks scattered and kind of capricious. White wave starting to break down here, holding along the 50-day. Zebra blew apart after earnings. Look at that. Oh, that's ugly. Been watching Zyop kind of breaking down. Zoe's hanging along the 50-day, 10-week line. Not much going on there. So you get a sense that this is. Yeah, that's it, Scotty. Look, it looks way funky. Everything looks funky. So it's a tough environment to do a lot right here. I think if you just hit everything on the short side the past few days, and I made pretty decent money over the last couple 3 days, and now you're kind of fat and happy, and maybe you covered some stuff and you hang out, you know. And I guess that's kind of what I'm doing here. I got a little short I'm testing in Facebook, but it's not going anywhere. I mean, it's below where I shorted it, but it could easily rally back up or bounce lower. I don't know. And watching a few other things. Google, they came out, they're reorganizing the company, so it's caused this gap up. I personally don't understand what the big deal was, but you know, what do I know? It's holding. So you're getting this little cup of handle and it's trying to hold, and maybe it does go higher. I don't know. I tried shorting yesterday, got a few points out of it, but then you could kind of feel that the bid was still there, and I basically backed off, took my profit, and watching it now. So any other questions on individual stocks? You know, I think there are environments where you don't have to do much, and I would say this is probably one of them right now, at least, because I think you just got a nice break off the peak with a lot of shorts. I mean, names like Biogen, Baidu, Apple breaking down, other ones that have presented nice tactical short sale setups. And my experience is that when you do make a nice score like that in a few days, or about a week's time, you put it in the bank and then hang out because things may need time to settle out. Now, the other thing I would be watching for here is whether we fail immediately. Because remember, I'll go back to this theory about the crowd knowing that we've hit a low, because it looks like all the other lows, right? You big reversal right off the bottom, and then it just goes higher, and you know, everybody's happy again. And we get to the highs, and everybody gets excited, and then it rolls over again, and that's been the pattern. So when do we break the pattern, and what conditions might we see when the pattern breaks? I would argue the first one would be you're going to see a lot of leaders breaking down, and we've seen that. And it looks like more, and I have to admit I haven't. It's not like I've gone and tallied them up, but just using my eye and my memory of what I've looked at all year, it seems like there are fewer things setting up here than I've seen before in other rebound or bounce attempts. So that may be bad, you know. But in this market, the ugly duckling sometimes comes into play, and what looks when things look the grimmest, that's just that many more stocks out there to rebound and send the market higher, back up to the highs. So who knows? I like to joke that maybe we see the ugly duckling get a visit from his even uglier cousin, the hideous duckling, which maybe that's what shop is like. If we look at shop, you know, it looks grim here, and the ugly duckling shows up here, the hideous duckling shows up here. That's where you buy it, and it looks pretty grim at that point. So, and there's Biogen. These were great shorts the last couple of days. See how you got these nice breaks. Apple as well. Just looking around at some others. This is a short portion of my list. Here's Gilead rallying up into the moving averages here. Maybe that's a short right there. Maybe not. I don't know. Illumina, I think we talked about this one before last week, somewhere in here along the 50-day, and now it's broken down, bounced off the 40-week line here, so it's rallying. Maybe that comes into play on the short side. I think I even talked about Intel somewhere back in here as a short, but it's just a big old boring name that's really going nowhere fast. GMCR busting. LRCX, that's another ugly semiconductor. Let me take a look at some of these here. Here's LVS, breaks the 50-day, rallying up into it today, possibly a short there. I like it better as a short up here, so I think we talked about that one last week. LinkedIn, to me, this thing it's undercutting these lows down here, so I'm thinking it's got a rally, and I guess maybe it did that today right up to the 10-day, and that's as far as it's going. I would love to see it rally up to the 20-day, which is a 202.57, but that so far hasn't happened. But you know, I think if you shorted it on this gap down move, the 209.90 high here was the spot to hit it, then you made some money here, but about 10%, something like that. And that's reasonable for now. Now you're kind of in no man's land, looking for some kind of a rally to short, and maybe that's what you saw today. I don't know. Right at the 10-day. Sometimes when they're weak, that's all they'll get, and they'll follow the 10-day down pretty religiously as they bust apart. Where are we? Yelp, what a piece of garbage. I remember the same guy telling people to buy Disney the other day around 120. Also told people to buy Yelp at 78, which I guess would have been right around in here. And that's worked out pretty well, huh? I mean, in all honesty, and it's one of the reasons I don't go on TV anymore, my view is if you really know how to trade the markets, that's what you would be doing. If you don't really know how to trade the markets, then what you do is you go on TV, I guess. That's my thinking. So, and a lot of these guys, you know, they got to tell people to buy stuff all the time and be bullish, and I don't think it's a winning game. All right, let's see here. Market's just bouncing around. That's all it's doing here. Now we're up on the Dow. Nasdaq's up 8, just pushing around. If we go to the top, you can see we're down up 471 here, and Nasdaq's pushing up 858. S&P's still down. Any questions? So just look at Grub. Yeah, that got crushed too. And that one was looking good up here, big, but that's a pod, you know. And once it broke, it actually could have been looked at as a short. Let's see. I'm not mentioning names on Fox Business, but you can put one and one together. A Biomed, what am I supposed to say? Dr. K already talked about this. It's up there. So what are you going to do? Buy it here? Certainly not going to buy it here. Maybe you'd sell into the move. So, but you know, you shouldn't even, I don't even understand why you're asking a question about it. If you own it and it's up, where's your trailing stop? Have you thought about that? Or are we supposed to tell you what to do? If you don't own it, are you going to buy that extended pattern? So, you know, I don't know. It seems like a pointless question. Anyways, any other questions? So I think you're in a funky market. I would be careful. Small positions if you're testing anything until we get something more decisive. And you know, the market could be all over the place here. So, and it is. So that's pretty much my conclusion. Any other questions? Otherwise, I think I'm going to wrap it up. Nope. Any last words of wisdom, Dr. K?
No, I think everything's been said. You know, you got to just keep your eye on, you know, because it's the market can serve anything, anytime, and we know that. And don't get complacent, and don't make assumptions, because we are in a QE-laden environment. So, you know, just because something's done something 10 times in the past prior to QE doesn't mean it's going to do it in this environment. So, yeah, it comes back to the very basics of price, volume, action, interpretation in your stocks, and I think that's your best lead in this environment.
Yeah, I mean, we could just be in a bizarre. Oh, there's one last question. Somebody's saying, Dr. K selling into weakness. An example, please.
Well, I mean, everyone knows. I'm surprised. If you're new here, you must be new, so that's fine. There's no such thing as a bad question. But I'm known, like, from many years. In a better market environment, in a trending market environment, I like to sell on a violation of the 10-day moving average. So if it closes below the 10-day and then goes below the low of that day, that it closed under the 10-day, then that's my sell signal. Now that works. I found that worked very well in the 90s. It also worked in this last decade. But you have to be in a good market environment. We haven't really had a proper trending environment. This QE environment has kind of skewed everything. So I don't use that rule in this environment. I mean, using the 10-day as weakness is a bit late based on the way I like to trade in this environment. And I've moved more toward if the stock has a big burst of strength. You know, someone asked about ABMD, or you could ask about TREE. You know, these both are pointing straight up, and you got some nice profits in them. So I don't sell into the strength because you don't know how much higher this is going to go. But in this kind of market environment, the moment any of these stocks start to show a sign of weakness, I'm going to be out of the position. So it doesn't have to hit the 10-day, or maybe it comes back to the 10-day, or maybe you have a high volume day to the downside, or you have a mini gap at the open, mini gap lower at the open. I mean, these are all cues that I would take to sell on weakness in this environment so I can keep my profits.
Yeah, someone else is asking for a VIX model update. Personally, I don't really see the point of that, given that the model isn't even being posted to the website. You know, I don't understand. Are you supposed to tell people what the model's doing in real time every week? But if you want to answer that question, somebody's asking
a lot of people, I think,
a VIX model update.
They're waiting for it with bated breath, I guess. You know, it's done well and it's doing well, and despite this ridiculously sideways, challenging environment. So you know, I'm very pleased with that, and yeah, it is going to be released in beta form. But it will be released when it's released, and asking every week about it is not going to speed up that process. But it's going to be coming out, so rest assured.
All right, very good. Okay, well, that's all we got, you guys. Thanks for showing up. Good luck, and we'll see where this thing goes. But you know, it could just be the end of summer, and you're better off either at the pool or the beach. So until next week, have a great day. Have a great weekend. We'll catch you then.
So long.